Very challenging trading day today. We had a loss in the 200K portfolio of about 12.5K. So one of our worst days ever in the 200K portfolio to end the month. All the markets had massive chop. I mean, some of the most incredible chop I've seen in all of our four major markets all at the same time. So minus 12.5K in the 200K. I'm recommending scaling back to the 50K portfolio. So what I'm doing in my trading is the 200K portfolio. We'll now trade the 50K portfolio on my side. That's your decision on your side. A new month, new quarter tomorrow. All of a sudden, the market could become orderly and more tradable. But it's hard to imagine at this point. Made a new worst case drawdown, so risk management kicks in, and we're down about 22.5% on this. And so we'll have the portfolio calculator updated. I've had some issues reconciling the trades. I've seen more trades this month with bad data and data corrections changing the trades, and I've had a tough time with my portfolio calculator reconciling that. An EVP trade was missing, and so more on that later, but let's go on the trades of the day. The 50K, it was down 3K today, so it's actually a good place to start. It made equity peaks on Monday, so the 50K portfolio was at equity peaks. It was recently in a 7K drawdown. It made equity peaks and was up about 8K on the month, and now it had a 3K loss to finish the month. And so good starting point to start the 50K. Some of these other portfolios are too aggressive for this much chop. There's too much chop, but the 50K is more selective and has lower frequency strategies. So that's where I'm at, trading the 50K. Let's go over the chop in the markets, market internals to show you what was so difficult. I want to show you also, I'm going to go over crude oil and how wild that market was with China, news out of China. Gold and silver all of a sudden rallied, had a massive bullish rally today. I'm not sure why. Soybeans had the crop production report today. ZS for soybeans. That was a wild market as well. So all these markets were all wild at the same time to a greater degree than I've ever seen. Q4 of 2020 was tough, and we scaled back to the 50K portfolio last year when we were trading it to make the current adjustments. But I think we're seeing new levels of chop at different index levels. And so these levels of chop, in an old market, these are narrower ranges, but these moves are much bigger. We're talking 50 and 60 point NASDAQ moves. We're talking $1,000 NASDAQ moves quickly. So you're talking about 1, 2, 3, 4, 5, 6, 7, 8, and then you have this 9, 10, 11. I'm trying to capture the big moves. 12, 13, 14, 15, 16. So a move like this is 14,760 to 14,820. That's 60 points. That's $1,200. $1,200 per contract in the NASDAQ right there. And a quick, 10, 15 minute move, it's moving $1,000. And so I'm trying to catch all the turning points that are greater than 50 points, and just roughly speaking, we have about 16 or 17, seeing about 6 to 12 moves per day like that, much more than normal, much more than normal in those ranges. And we've seen the NYSE ticks, they opened up strong. The advanced decline line was at a plus 1,000, came to minus 1,000. See minus 500 there, back to zero, to minus 1,000, to minus 500, back to minus 1,000. And so these static prices may not look that different than normal, but I'm telling you, these are pretty extreme. The ticks it sold off was up at plus 1,000, went down here to minus 1,000, bounced back, minus 1,000, came back up here, trying to get to 1,000, went to near minus 1,000 again, then back up to 1,000. I mean, wild movement it takes. Plus 1,000, near minus 1,000, plus 1,000, and then minus 1,000. So all trying to make sense of this intraday with the algos. S&P had a big 80-point range, and these charts, the patterns look classical, but such big ranges and such big chop. You see, right here, the market makes the high is 43.43, the low is 43.24. So you have 1,000 point a 1,000-point range right here, 43.43 to 43.24. So $987 range in about 15 minutes, or 10 minutes actually. So you get 1,000-point ranges in 10 minutes, back and forth, without ever a clean break. There's such chop around each move. So that is what's making it difficult. The VIX was up on the day a little bit, not much. 22 to 23, not a big move in the VIX. And that is my take on the stock indexes and how they're choppy in the market internals. We had 60-minute breakout short. One of the trades that strategies we're trading is stopped out. Got a short trade, stopped out. Got another short trade. You just that curl up. It won't go lower. It curls up. And then here's the optional. Here's a soybeans trade on the day. Wild action in soybeans. Crop production report came out. Got 11.5 cents of slippage on this trade. Stopped out at the 12.85 area. Got filled at 73.5 down here. So big slippage on this trade. And then euro currency, choppy in euro currency, minus 181.25. Copper was a highlight on the day, plus 587.50. Silver, massive reversal in silver, big move up, 3% move higher. Minus 825 in Esser counter trend 2 and 4. We're trying to short the rallies in a downtrend, but you have a fast downtrend and then a reversal, kind of a V pattern instead of that wave that we talk about. And we have more V patterns these days. Esser counter trend 2 gold, minus 825. Esser counter trend 4 gold, minus 825. Asia gold 4, minus 525. Silver has been gold and silver have been really weak, but we still struggle to catch the short trade. And then minus 565 on Cobra Gold. Quick reversal, got in a little late. And RBOB, no trades on the day. Natural gas, no trades. Crude oil was challenging as well. We got stopped out near the lows on Esser counter trend 2 and 4. Overall, it's a good trade. The market traded higher. We're bullish crude oil. There was news out of China. China was let's go over these trades first. I'll tell you the news. Minus 825, minus 825. And then the news came out that China wanted to stock up on crude oil before winter at any price. And it didn't even take out yesterday's highs, I don't think. No, it didn't even take out the weekly highs on that news. Goes up to 76. Cobra crude, conservative got in, and then OPEC said they'd increase production, and it went back down. So you get this move where it comes back to the middle, sell off, spike down, spike up, back to the middle. Cobra crude aggressive got short, gap fill in reverse got short here, minus 525, minus 725, minus 345 with an end of day exit, and then minus 825, minus 825. Just a rough trading day, rough market, difficult price action. E-mini S&P, Cobra 3, one of our top strategies. This is a non-profit target version, minus 625. It finally made its way back to these levels on Monday, September the 20th. Talk about a long prop up. We've been tracking this sell-off since this Friday back here. This Friday on September the 10th, we've been tracking this sell-off. We thought that this is the beginning of some real selling. Market was propped up all week, was sold off a little bit on Friday, gap down, continuation, and then propped up back to this Friday's close. And then on this Monday, gap down, continuation, propped up, and then sell off is trying to prop it back up. They're keep trying to prop it back up. But we finally made it back down to the low on Monday, September the 20th. And so 10 days later, let's take a look at the other strategies. Cobra 3, profit target version also stopped out, minus 625. Adaptive moving average, plus 437.50. Captured a little bit of the trend after massive chop yesterday. And after hours, this was a highlight, plus 1312.50. Nice trading. After hours 3.0. ES2, minus 100 on VSD long only. Tick wave, minus 825. Let's see, we didn't go over tick pullback though, did we? Tick pullback, This is a trade that I liked. Looked like a reversal rally coming into the markets. The trend is just very unclear in real time. After all this propping up, I say that we're due for more downside, but it's so hard to get any continuous selling. It continues to be propped up, and so then it seems like the market's going to reverse, and then it rolls over at the last minute. So very tricky price action, and tick pullback got long for a rally into the close after the ticks were pegging 1,000, and didn't work out too well. Minus 525 on the day. NASDAQ had that same scenario on its tick pullback NQ minus 725. Tick count trend, we didn't trade that one, minus 1250. SR counter trend 2 plus 775. SR counter trend 2 V2 1M minus 725. Plus 575 on SR counter trend 2 V2 5M minus 725 on SR counter trend 2 V2 15M. SR counter trend 2 M 5M. SR counter trend 2 V2 M5M is plus 575. So the SR counter trends had some winners, just a small move in that on that chart you can see. And Cobra 3, same as the ES, stopped out on both the profit target and non-profit target versions. Minus 625. Stock index swing, third winner in a row, plus 475. Basically need small profit targets in this market because it reverses quickly. And 60-minute breakout NQA and B stopped out. Minus 525, minus 1425. PR breakout, minus 725. Tick wave, minus 825. VSD long only, plus 970. VSD long short, plus 35.35. This one's done terrible, but it did great today. It almost takes a strategy that has been doing terrible to do great on a day like today. Viper 2008, minus 475. Viper 2021, minus 475. Cobra 3, big stop loss, minus 1225. You would have needed over a $2,000 stop loss for this strategy, about a $2,200 stop loss for it. And then a small winner at the end of the day, plus what's the profit on this? Plus 635 on EVP1. Those are the trades on the day. I'll have the portfolio calculator updated. Like I said, I've had some issues with trade reconciliation. I did not get this trade signal on my VPS. Does not show this trade signal. We're missing it. We've missed some other trades this month. Some data has changed. Data changes. There's been more data changes this month to change trades than I've seen in any given month. On top of our challenging trading. So just a tough month. I'm glad this month is over. Glad to move to Q4. The market could change tomorrow, but as part of my risk management, I am moving the 200K portfolio to recommended the 50K while I work on a better setup, some potentially new strategies. I've been trying to develop some strategies for this market. It's very difficult. Some of the strategies that I've found only test back several months. So it's hard to justify trading a strategy, but we could be in a new market regime, and stepping back on your trading will give you the opportunity to sometimes see things more clearly, and that's what I need to do to more clearly see this market and manage risk. So that's what I'm recommending that you do on your side, but you can stay with it if you want to stay with it for a few more days to see if the new quarter does well. We've tried to stay with it, but down at new worst case drawdown, so we're pausing here, moving the 200K portfolio to the 50K. We did that in 2020 in Q4 as well. It was very choppy. So 50K is at a good place to enter. 50K portfolio hit an equity peak on Monday and had about a 3K drawdown today. We had slippage in that soybean, so the hypotheticals won't show as much, will show less loss because we use typically $25 round turn slippage and commission on average. We're getting greater than average slippage this month. That's an additional issue this month. We are having more slippage than I've ever seen. More slippage, more slippage. 2, more data, more technical data issues with TradeStation. On top of that, my Microsoft Excel has been crashing on me. So it's one of those things where when everything's going wrong at once, and then the strategies are struggling in this market conditions because the markets are different than what I'm used to seeing. So we find inefficiencies in market patterns and structures, and we've done well this year. The last 2 months, starting at the end of July through all the way through September, we just mainly see chop and very few trends, hardly any trend at all, just wild chop in the market. So that's what we're working on. Want to come back to this and get a good strategy set up going again at some point in the fourth quarter, if not Q1 2022.